Okay, well, my name's Jeff Wells. Been doing Medicare for about 10 years. And so I wanted to give a quick overview for those who are either turning 65 and want to get some basic information on how this works, or you're aging out and on a health insurance plan with your employer. And so there's a couple different options we'll have for you. As you
Yeah,
can see here
and
on this slide.
let me just
Yeah.
interject really quick. My name's Melissa DeWeese, and I am your happy insurance broker that works with the employer plans of the business that you are working with currently. And I want to provide this platform for you to have more information about Medicare. We understand how completely unintuitive insurance can be, and that it is like speaking a different language. So just adding some clarity, and I will interject throughout the presentation asking questions that I think that you would like to know the answers to. And of course, if there's any other questions that come up after the presentation that we have not addressed, please feel free to message me and I will get the answer for you, or perhaps make a video specific to that question. All right. Sorry about that,
Perfect.
Jeff. Go ahead.
No problem. No problem. So yeah, there's not a lot out there when you turn 65 on explaining how this works. So you have a 7-month window when you're 3 months before you turn 65, the month you're turning 65, and then 3 months after to kind of sign up. And what you'll end up doing is signing up for Part A and Part B. And Part A covers your hospital, and that's typically no cost. Part B is covers your medical and hospital and doctor visits, and that typically does have a cost. Next year, 2024, it's $174.70, and it's usually taken out of your Social Security check. And so that's your A and your B, and that's some people just stick with that and get a drug plan as well. So Part D here is typically between $10 and $50 a month. You can buy a drug plan. And then you've got your A, B, and D. Okay. Now, there's a couple options you have because that doesn't cover everything. A and B only covers 80% many times. So, what you want to go with to protect yourself is a Medigap program, is one option, or option two is a Medicare Advantage plan. And that combines your A, B, and a drug plan all into one. And so then you'd have A, B, C, and D because Medicare Advantage is sometimes called a C plan. A Medigap plan, let's go over that first. Okay, so here's
And then,
Medigap.
so between
Yeah,
option one and two, the second option, those tend to have lesser networks, correct? Or is that more like an HMO style?
correct. Well, some of them have PPOs, some of them have HMOs. You
Okay.
can kind of choose depending on your area. Arizona, we won't specify the state, but for example, Arizona has HMOs and PPOs. So
And California as
um,
well, correct?
in California as well, correct. And so the advantage of a Medigap program is that there is no network. As long as the doctor accepts Medicare, um, the Medigap plan is a good policy and it fills in the gap of that 20%. Now, a Medigap program does typically have a monthly cost, and that would be above and beyond that Part B that we mentioned of 174.70. And so the typically it's around 100 to 120 for a Medigap plan, and then it also you'd have to buy a drug plan as well, so another $10 to $50. So for those who maybe are living on a fixed income, they can't afford that. Well, then you have another option, which is your Medicare Advantage plan, and those are typically no cost. As you mentioned, Melanie, those do have networks that you have to stay in to get the best pricing, or an HMO. Obviously, to get coverage at all, you have to stay in the network. But they are typically no cost, and they offer extra benefits like, well, they have a drug plan built in, so you wouldn't have to pay extra for a drug plan. The plan is zero cost per month typically. And then you pick up some ancillary like dental, vision, hearing. You get low copays if you go see a doctor, for example. Many times your copay would be zero for primary care, or if you see a specialist, it's between 10 and 50, depending on the plan you choose. It's got your hospital and your medical all built into one. So now you have A, B, C, and D because it includes everything all under the Medicare Advantage plan. And that's what a lot of people go with that are on a fixed income. They can't afford that extra supplemental gap policy that we talked about. So they go with this Medicare Advantage plan. And so as you can see, it does include the drug plan. It has its networks that you have to stay in. And what we would do is check your doctors. If you have doctors you have to have, we would check those doctors, make sure they're in network with the plan you're choosing. And then we would also look up your drugs, make sure they're covered, tell you kind of some estimated pricing. So then by the time you get started, you'd have something in place that would work alongside your A and your B of Medicare. Your A and your B will always be there. We're not replacing them. They'll always be there. You'll always have those. But you can either choose between the Medicare Advantage plan or the GAP plan, sometimes called the supplemental plan.
And the
And let me go
gap
back to that
plans
screen.
tend to have better networks, access to doctors, things like that.
Yes,
So,
exactly.
when I've come up with challenges or had challenges come up with the supplemental plans, is that when we're looking at the Medicare Advantage, sometimes depending on where the person lives, their doctors may be insulated from a lot of networks. So, for example,
Hmm.
in LA or Phoenix, a bigger city like that, they might be able to go with an Advantage plan because there's so many doctors, there's so much competition that a lot of doctors work with a lot of different insurance companies on a lot of different contracts. But if you're in a more isolated area like Big Bear or
Hmm.
Santa Barbara or maybe somewhere in New York. Maybe
Yep.
maybe that would not be as advantageous. So,
Yes,
and then the
exactly.
other part that I think really confuses people is, which I'm sure you're going to get to, is the Part D component. Um,
Yeah.
just because it feels like once you've got A and B in the supplement that you should be able to just move on with your life and you shouldn't have all these cards. So, which
Right.
kind of leads me to my next question: how many insurance cards at the end of the day would the member have if they go with Medicare Advantage versus a Gap plan?
Good question. Yeah. And just one thing about the supplemental gap plan is it's also good for those who travel. Some people travel in their retirement, and it's good for those as well because you're traveling all over the nation. You don't want to worry about calling the insurance company and figuring out if there's a doctor in your area that's under the plan, and they may not be. And so that's another good reason for a Medigap plan. Now, if you had a Medigap plan, to answer your question, you would have two cards. So let's say you went with, just as an example, Humana for your Medigap plan. And let's say Humana also has a drug plan that fits your needs, which we would check and check your medications. So you'd have a drug plan, Part D card, and you'd have your Medigap plan through Humana in that example. So you'd have two cards. Plus, you'll always have, like I said, you'll always have your A and your B Medicare card, which shows your start date, your A and your B start date, and that you have that. Now, you wouldn't really use that if you had a Medigap plan, the A and the B Medicare card. You just use your Humana Gap plan and your drug plan for your if you go to your pharmacist. And then if you get a Medicare Advantage plan, your drug, let's say you also get it with Humana, just for an example, it would have a drug plan built into it. So you show that card to your doctors and pharmacy. So you'd only have one card above your A and your B Medicare card. Okay. And
Okay.
again, we're not replacing your A and your B. We're just adding those benefits that the Medicare says, okay, you paid your whole life into the Medicare system. Now you're going to get these benefits. And sometimes the Medicare Advantage plans, the dental and the vision is okay. It's not the greatest. It's not going to go out and buy you some dentures, for example. Many times there's just not enough money in the dental plans, but it'll give you cleanings and X-rays and those type of things uh, built into it typically. Okay, and then your copays for doctor visits, your copays for hospital. It's more of a copay driven plan, meaning you pay your small portion, the insurance company pays the difference. And so, for example, hospital stays many times, and again, it depends on your area, and we'd go through that before we signed you up. For example, they have a 200 per day for 5 days of a hospital stay. Then after the fifth day, you pay zero. So there's not many times there's not a deductible per se, but there is that copay that you pay your portion of, and then after you pay that portion, the insurance company pays the rest. And same with your doctor visits. You pay your copay and you're done. So it's kind of nice because you know exactly what you're paying going in to a hospital or doctor, and you're still getting, your preventative stuff at no cost, and just like an insurance plan through your work would be. And so that's kind of the three ways. You've got A, B, drug plan, a Medigap plan that fills in the gaps, and a Medicare Advantage plan that would typically be no cost. The Medigap plan, again, between 100 and 120. One of the negatives there on a Medigap plan is they can go up in price yearly. So you might start out at 120 and then it goes up to 150 or 160 over the next couple of years. So that's one of the disadvantages of a Medigap plan. If you can't afford that, I would then recommend a Medicare Advantage plan that are typically no cost, and you get the drug plan built in. You pick up dental, vision, and hearing, and some other good benefits they offer. So, Melanie, that's kind of my kind of elevator speech example and explanation of Medicare. Any questions you have that I may have not answered?
Oh, yeah, sure. So, I get a lot of questions from employees. So, a typical question would be, Melissa, I turned 65 in 6 months. What do I do? When do I register for Medicare?
Okay. So, yeah, you want to start when you're about 3 months out from Medicare age or aging in. You want to start 3 months out from starting to get your A and your B in place. Okay.
Mm-hmm.
So, and then you've got a 3 month window there. You've got the month you signed up, and then you got a 3 month window after your birthday month. So you don't want to mess around with that because you could then start accruing penalties if you don't sign up in time. So you got to be careful there. It's called the late enrollment penalty. You don't want to mess with that, especially drug plans. I've seen drug plans where people didn't even know they were supposed to get a drug plan. They just thought A and B was good enough. They didn't know because it's not really well explained on the websites. And so they started then having to get this penalty accrued, and it comes out monthly out of their check, and it's never goes away. So just to reiterate that that's very important to start working on this and have it in place by the time you turn 65.
Okay. And then, so to sign up, they go to cms.gov, correct?
For A and B of Medicare, you actually go to socialsecurity.gov, and there's a section there under sign up for A and B that you can sign up there as well.
Okay. Can you see my screen? I just tried to share it with you.
Let me see. Let me stop sharing. Share. Where is it? Okay, yes, I can see yours now. Go ahead. Yeah.
So this is ssa.gov, and
Right.
we've got sign up for Medicare, correct?
Yep. Got it.
Okay, so they make it pretty simple. I remember doing this. I walked several employees through this, and then my dad, when he was eligible, needed a lot of hand holding with this. And it used to be you could sign up 6 months prior, but they reduced it to three. You have to wait till 3 months prior to your 65th birthday.
Right.
And
Yep.
kind of the next question that I get when we're going through this process is, which you already alluded to, is regarding the penalties. So if you don't sign up, you can get penalties. However, if you're on an employer plan, you technically
Mhm.
don't have to, but then it's kind of a pain to prove that you've been on a plan, correct?
Right. You'd have to kind of prove to Medicare that you had other coverage. So whenever I leave a job or whenever anybody leaves a job, they should always get the HR or whoever handles the health insurance to get a letter saying what months you had that coverage. So you can prove to either Medicare or Social Security that you had other credible coverage. As long as you had other credible coverage, like some people are VA vets and they have that VA coverage. They don't have to worry about it, but Medicare sometimes doesn't know they had VA, so they start charging them penalty, and they got to go through the process of getting it taken off. So always always be good to get that letter from your company.
Yeah, and so a lot of times I'll just tell people just go on there and sign up. I mean, once you're
Right.
eligible, just sign up for it's the part B, right? That's the free.
The A is the free one.
The A is the free
Um,
one. Okay.
we can't use the word free though.
All
Remember.
right. Okay. Sorry.
But the part B is the one that's 174 and 70 cents every month. And the only way to get rid of that is if you have Medicaid. And if you have Medicaid, they'll pay that for you. But um, Medicaid opens up a whole lot of other programs for people. So if you have somebody with Medicaid after they retire, then we'll talk about some options they have as well.
Okay. And what qualifies somebody for Medicaid?
It would be state specific, and if you make, for example, Arizona single person, I think it's 1,200 a month. Don't quote me on that, but that just for an example. If you make below that poverty limits, you're able to get into Medicaid, and if you're getting into Medicaid, they will help you get into a plan called a dual eligibility, meaning you have Medicare and Medicaid. You can get a dual plan, and those get your copays typically down to zero. They give you extra benefits, sometimes food cards and things like that. And so, if you do end up having somebody who's eligible for Medicaid, they would go through the state and see if they can qualify.
Okay. And it isn't if somebody's on dialysis or something like that, they can also qualify.
Yeah, exactly. It used to be they would have to go into a different type of plan, but they kind of changed that. So now they don't have to worry about it. They can go into whatever plan they're eligible for, whether they have Medicaid or just a regular A and B plan.
Okay. So I'm an employee. I'm turning 65. I go on and I register. I sign up for A only, which is the one that's not going to come out of my Social Security check.
Mm-hmm.
If I choose B, then that will cost me, what is it, $100 a month?
174 and 70 cents.
$174 now. Okay.
Yeah.
And then I can look at whether I continue with my employer plan or go on a Medicare option.
Correct.
Yeah,
Yes.
which kind of brings me to the next part is that the employee has to initiate the conversation with their employer about going on to Medicare. We cannot, and
Right.
the employer cannot have the employee feel any pressure or like they're being sold to come off of the group plan.
Right.
So a
Exactly.
lot of times what I'm having to do is dance around and say,
Mm-hmm.
hey, it's a lot less expensive for you, employee, to sometimes to go on to Medicare versus what you're paying with your employer coverage. And and we would evaluate that at that time once
Right.
they're in that 6 months to 3 months before they hit Medicare, so we have time, or Medicare age, so we have time to get quotes together and
Right.
evaluate and talk one-on-one with the employee. It is always a one-on-one sort of situation. Unless your
Right.
employer offers a Medicare supplement through their group plan, which is becoming less and less popular. I have very, very few groups that do that anymore. It's because
Right.
it is so specific. Like you said, with the
Right.
Part D, a lot of times Part D which is the prescription plan, it is so specific to that employee's dosage, that what the employee is on as far as medications are concerned. And your
Hmm.
employer does not want to get their hands dirty with any of that, private
Correct.
health information. That's something that you should be speaking directly with an agent about, and handling that on a one-on-one
Right.
basis.
Yeah. And what I would end up doing a lot of times when I was selling Medicare is do the math for them. Okay, let's say they're on an employer plan, they like it, they want to stay there, um, and but it's costing them 250 a month, right? Well, you can talk to them about staying there, or you can say, okay, you would have your Part B, which is 174 and 70 cents a month, and you could drop off your policy at work, go to Medicare, which, at some point you may have to do that anyways. And now you're set up with only 174.70 coming out of your Social Security check. So I always help them do the math and say which one is going to be more financially feasible for you. Go over the plan with them and say, here's the deductible or no deductible, here's the copays, here's the dental, vision, hearing. So just kind of show them the options and let them kind of decide, do I want to stay on my work plan? And that brings up another point about a work plan. As you mentioned, some people retire and get a Medicare plan from their retirement. And in those cases, they probably want to stick with that. And I ended up talking to a lot of people who would call us anyways because they didn't know they were supposed to stay with that retirement plan. They would just see the benefits and say, I want those. Well, if you sign up for a Medicare plan outside of your retirement plan, you may lose that retirement plan. So it's important to not call around, have a good broker that you trust, that they can go over these options with you and say, look, you cannot shop around because sometimes you'll get a shady agent that will sign you up without you really knowing, and now you've lost your retirement insurance. So it's another thing to be careful of
Okay.
that I ran into.
Yeah, and I think it's been several years now. So probably like about 20 years ago. What was it, 2001, 2003, somewhere in there? Bush implemented the health savings accounts. That was a
Hmm.
big new product that hit the market. And I see more and more, it stayed pretty popular. There's quite a few groups out there that offer HSA plans. Now, that poses an issue with Medicare, correct?
As far as, if it depends, they can still keep their HSAs. That's no problem with their work. But again, that would go back to what type of plan they on.
With the IRS, an employee or a person cannot continue to contribute to an HSA account while they are on Medicare. Yeah, I
But
think
one
they
other
can.
thing.
I think they can keep taking money out. So let's say you've worked, with a company for 20 years, which is kind of rare now, but let's say you've been saving in your HSA for 20 years and you have $40,000 in there and you
Right.
retire, you go on Medicare, you can continue to take money out of that health savings account, but continuing to contribute to that health savings account is no longer allowed on a tax-free basis. So to have an
Is that
HSA,
how it works?
yeah, the
Okay.
whole point of having the HSA is so that they can reduce their income tax,
Okay.
reduce their annual income. And so I guess the thought is that because you're on a government sponsored plan, or a plan that is not a high deductible technically. So
Okay.
if you, sometimes what happens is somebody will be turning 65, they're on a group HSA qualified plan and continuing to contribute to an HSA savings account, and they sign up for Medicare. So
Right.
Medicare is filling in some of those gaps. Technically, the IRS doesn't want you doing that because the whole point of an HSA account is to have a high deductible plan. And the reason why the IRS is letting you I'm not a big fan, but the reason why the IRS is letting you get some tax savings there is because you have that high deductible. Well, if you have Medicare now swooping in and paying some of those claims, you're technically
Right.
now not qualified to be putting money away in that HSA tax free, basically. So,
Okay. And one other thing I wanted to go over that's important when we talk about group sizes is if you're under 20 lives, Medicare says that Medicare is primary.
oh, good. Yeah.
And so you want to join Medicare in if your group is under 20 lives. Okay. So there's that break off period. Just remember, under 20 lives, you should probably join Medicare. Under over 20, you kind of have the choice. It's your choice. Um, because once you get over 20, then employer becomes primary.
Uh-huh.
Okay, so just remember that 20 life cutoff. 20 and below should probably join Medicare. 20 and above, it's kind of your choice. So just to make it simple, there's things we can go into the weeds there, but that's basically to make it simple.
Yeah.
Just remember the 20 life cutoff.
Yeah, because yeah, once you start Medicare is no longer primary, that over 20 Medicare is not
Hmm.
really paying anything in
Right,
most cases.
right.
Because,
And you can wait also if you let's say you decide you want to work till you're 68 years old and you're in a group over 20 and you want to just stay on that plan, you can decide to waive that Part B until you actually retire. So that'll save you 174 a month. And so just keep in mind that 20 lives is the break off period there. Point.
what's the best way to get this started? So we have somebody come in tomorrow and need help with Medicare. How would they get help?
I would have them email me and or you email me, CC them, because I need to send them what's called a statement of appointment where I get permission for them to discuss certain plans. We'll need to get that out to them. They send it back to me. And then I end up calling them typically and we just walk through it and I show them the plans that are available let's say in Maricopa County, Arizona, for example, where I'm at. I show them all the plans available. And then we choose one based on their doctors and their drugs that we go over. And then we submit it for you so you don't have to fill out tons of paperwork. And then from there, you'll get a packet in the mail from the carrier and it'll have your start date on the card and so forth. And you'll be set to go. We'll make it pretty easy for them from there.
Okay. And what I'll do is I'll just have the employees reach out to me directly. So it's Melissa at knomad.insgrp.com. I'll make sure that you have my email and you can email me any inquiries and I will connect you with Jeff and make sure that that gets coordinated and you can just expect that you will have to sign, basically an authorization agreement allowing to share private health information, and then Jeff can take it from there and answer any questions that you have about Medicare and actually get quotes going for you as well to compare. And then, of course, I would be filling in any gaps as far as information comparing to your group plan. So if you're considering
Right.
coming off the group plan and going on to Medicare, you want to know the differences, and of course, I would have all that information for you and can help in that process as well.
Okay.
When you are getting ready to turn 65, you end up on every
Oh,
mailing
yeah.
list and every phone list, and people find you from all over.
Yes, they do. Yes.
Whether it's from the US base or not. There are lots of lists out there that get sold to agents, and once you end up
Hmm.
on one, expect hundreds of calls and
Mm.
lots of junk mail.
Yes,
So this is
exactly.
usually what triggers people to reach out to me. That it is very confusing, and some of these ads are very enticing. I have to admit, I have certainly fallen for some ads that have come in the mail because they sound too good to be true, and then I call and absolutely they are too good to be true.
Yeah.
So
Yeah. Yes,
I
exactly.
tell
And
people
that's
just
why,
go ahead and, you can ignore a lot of that mail. I mean, you don't have to. If you want to go around and talk to 100 different people, you certainly can. However, when you work with a broker, they will look at all options for you. You don't have to talk to all of these different individual reps that are repping for individual insurance companies, Humana and
Mhm.
Anthem and Blue Cross Blue Shield and Aetna and all these different avenues. If you go to an agent, they shop all of the plans for you. You're not going to
Mhm.
get a special rate if you go directly to an insurance carrier. There's really no downside to working with a broker. I think it minimizes a lot of the noise, in my opinion. Of course, I'm biased because I
Mhm.
am a broker, and I certainly see the value. What do you think, Jeff?
Well, this is what I dealt with daily at my past job where I was selling Medicare in bulk. Is we would pull up there. One of the things we did is pulled up their Medicare on their Medicare site. They let us kind of see a history of their plans. Well, many times because of the noise and because of their advertising, people were changing plans literally monthly because they thought they were getting something better, and somebody lied to them, or a broker told them this plan's better than your plan, and they don't know because it's confusing. And so I always told people, pick a broker, pick me hopefully, but pick a broker, because
Right.
if you changing plans monthly or every other month or 4 or 5 times a year, you never really get the benefits that your plan offers, because you don't understand it enough to get the dental, the vision, the hearing, and then you switch to a new plan and you got to figure that one out. So especially in the seniors in this above 65 market, it's almost overwhelming when with the calls that'll come in. So
Right.
just pick a broker. You'll hear like flex cards, you'll hear grocery cards, you'll hear get some dentures and dental, and that sounds good, but you have to switch plans, and people don't realize that. Nothing is free.
Yeah. Yeah, or you have to switch everything, right? It's not just buying the
Right.
dental plan, it would be
Yep.
changing possibly all of your doctors, messing with your prescriptions. I've had people call me
Hmm.
crying because they ended up on the wrong
Hmm.
prescription plan. I mean, and wow, if prescriptions are not covered, they get really expensive, especially for
Yep.
people that have had employment their entire life and have had an employer take care of them in that area their entire life and then go on to a plan that doesn't cover their prescription, and they find out, because they're on Humira or something, or an injectable or a specialty medication, that it's $1,800,
Hmm.
$10,000 a month. I mean, when I
Yep.
first got into this business, it was just jaw dropping to me when I discovered how some of these very popular medications, you would think that the more popular a medication and the more of it that there is, that the less expensive it would be. But that's not always the case. If you say, oh, I'm just on this, everybody I know is on this, or I know a lot of people that are on this. A lot of times our immediate mental model is that, oh, it must be inexpensive. Well, no, that's not necessarily the case. I mean, just seeing some of these prescriptions are thousands of dollars a month, which is not sustainable for anyone that I know.
Right.
So,
Yeah. Then you got the donut hole, and you got the
oh
coverage
God, they
gap and
don't
all
do
that.
the donut hole
You,
anymore, right? They got rid of that. I was gonna bring it up, but
well, it's still there in a
oh,
certain. It's slowly shrinking,
okay,
but
good.
it's still
It's
there.
still
Still
there.
there.
Yeah, that's so
Yeah,
confusing.
you're
When I
gonna deal with it.
started in Medicare, it was a 2,000 or $1,800 gap, somewhere around there. It was '08,
Yeah.
right? That all that came out
Yep. Yep.
with Obamacare. Well, it
Yep.
was before Obamacare. It was Obamacare was 2010. So I remember during I think it was the financial crisis, they started messing with Medicare. There was some bill, and they did the
Yeah. And
donut
it
hole.
just basically, in a nutshell, it's basically what they do is, if you have an expensive medication, like you mentioned, Humira, one of these very expensive diabetes medications, once you and your insurance company have paid a certain amount of dollars together, then they say, okay, now it's your turn to pay. And so now you have to pay more. And then if hopefully you get out of that into the catastrophic stage, where then it will drop down. So
Yeah.
just in a nutshell, not to make it too confusing, but that's in a nutshell how that works.
Yeah, it's like a three stage
Yep.
program. And I would try to explain it to people in that it's like a deductible, but in the middle. That's why they call it the
Right.
donut hole. So instead of having a $2,000 deductible or whatever it is now, $1,000 or $500 deductible on the front end, which is what most people are used to,
Used to. Yep.
this is just hidden in the middle. So it like
Right.
surprises you in the middle of the
Yeah.
year because, and also pricing is not that transparent. You, especially in prescriptions, you
No.
go in and you pay your $5 or your $10 or your $20. It's hard to know, oh, that was a $500 prescription. So now,
Right.
I've spent, several $1,000s in the middle of the year, and now I'm in my donut hole for the
Right.
rest of the
Right.
year. And when you're on a fixed income, you want to know that it's a fixed rate, a fixed copay. It's not going to be
Right.
changing in the middle of the whole thing. So, how big is the donut hole now for most people?
Let me look it up real quick. 2024. Yeah, because in that example that you have a $500 drug, well, when you hit the coverage gap, you're going to pay, I think it's 25% of that drug instead of your copay. And let's see, the donut hole this year for 2024 is 5,030 to get in. Okay. And
Okay,
then
so that's
8,000
the.
to get out.
Oh my gosh.
Yeah. So it's closing, but not fast enough. But yeah, so the 5,030 to get in is you and the insurance company. Okay, so if you pay $50 for your copay for a Humira, and the insurance company pays 450, well, that 500 then counts towards the donut hole, that 5,030. So it gets a little confusing, and that's why I don't typically go into the donut hole much. Just know that it's there, and if you have a diabetes drug or a cancer drug or some very expensive drug, you're probably going to hit the donut hole, and people will find out pretty quick, probably in April, May, that their drug costs are going to go up, and it's
Yeah.
always a little shocking for them. It's sad sometimes because it can get very expensive.
Wow, I thought they were getting rid of that.
I've heard that, but every year I look and it's still there.
They're just supposed to extend it every year. You know how it goes in insurance and all these regulations is once
Yeah.
they're in there, it's very rare that they get out because it becomes part of the pricing. The actuaries build pricing models, and it gets difficult to get them out of
Yeah.
that when they're pricing the
Yeah.
plans. Okay.
Most people just stop taking their drugs, unfortunately, is the reality of how that ends up playing out in people's lives. But
Man.
unless you have some money, and then you're going to pay 25% of your drug costs, whatever. If it's a $10,000 drug, you're
Paying
getting hit.
2,500.
Hmm.
Wow.
So
All right, my
yeah,
friend.
that's it. It's just kind of a good overview that will help people understand the basics. I don't want to go into too much weeds because then it starts getting confusing and starts confusing people, but we'll help you figure it out. A, B, C, and D is really what we're working on. And we're going to figure out what's best for you, whether it's supplemental plan with no doctor networks or the Medicare Advantage plan. So we'll figure it out for you and